Hello and welcome to Banking Transform, the top podcast in retail banking. I'm your host, Jim Marous, owner and CEO of the Digital Banking Report and co-publisher of the Financial Brand. To wow customers across the entire financial journey, you must know them, understand them, and be able to proactively anticipate and deliver solutions. This requires taking an event-driven approach to offer contextual engagement and experiences. Today, banks and credit unions are ditching siloed departmental frameworks and instead are connected people, processes, and technology across the entire organization with a collaborative approach that puts insights into action for the customer's benefit. I'm excited to have Darryl Knopp, Senior Director of Portfolio Marketing at FICO, on the Banking Transform podcast. Darryl discusses the current state of personalization in banking and how organizations can use applied intelligence systems to improve experiences, engagement, and loyalty. Connecting with customers on a personalized level is no longer a luxury. It's a necessity. Customers understand what is possible with data, analytics, and modern technology. The challenge is delivering the experiences that customers expect. As FICO mentions in their new ebook entitled Accelerating Customer Decisions with Applied Intelligence, having an enterprise-wide view of your customer provides a lay of the land for financial institutions. Applied intelligence, though, helps to show you where to go in that vast landscape. So, Darryl, let's start at the beginning. Let's talk a little bit about what FICO is actually doing in the area of applied intelligence, but also about your role at FICO.
Sure. I'll do the latter first and the former last. So Darryl Knopp, I run portfolio marketing at FICO, and you can call it product marketing, portfolio marketing, but effectively my team is responsible for kind of content generation, the words that you would read on our site, materials that we would utilize for sales purposes, sales training internally. So basically making sure that our salespeople know how to sell our product and how to talk about our product, and that our customers understand what it is that we actually do. My role at FICO is not that. I have a team of experts in marketing, and I get to look very good on their coattails. My job, my background, I've spent 20, maybe more than that, doing risk management for banks all over the place. And so I'm really bringing voice of the customer into the conversation. So that's really my job, and in this particular case, I also get to be the talking head or the face, the gray-haired, wizened old banker. At FICO, so where FICO comes into this is we've got a long history in data and analytics, and we're quite proud of that. We've been around since 1956, and most people know FICO for the FICO score, the FICO family of scores. But we also have been in the software business and the AI business for a long time, and specifically really in. If you look at our Falco tool, so we have a fraud set of tools. We've got a long history in application fraud and in account management or credit card fraud, as well as we've got a long history in account management. So we have a couple of kind of legacy products there that are still being used today. And I don't mean to use the word legacy in a negative way, but really now we're removing, and this is the long introduction that should be a little bit shorter, into platform. Really, we're taking all that great IP that we've got in analytics and in scoring and in the application fraud and in application processing and in account management and in fraud management. We're taking all that and saying, okay, well, the industry is really moving away from having single applications to do all these challenging things because it requires a lot of management. When we looked across these tools, there's a common set of things. You take data, you generate insights from that data, you take action on that data, and then you observe the outcomes, and then you kind of loop through and you learn from it. Well, the reality is that whether I'm talking about marketing at the very beginning, pre-approvals, what have you, or if I go through the life cycle of originations, nurture and manage, I'm now getting into collections, getting into recovery. All of those things have some very common ways in which we make decisions and apply analytics to. And so really what FICO Platform is, it's this kind of modern architecture of capabilities that are used to do all those types of, I'll usually call them use cases, but all these types of actions and decisions that you make with data on customers.
It's interesting. I started in banking before you did. I started more than 40 years ago, and we talked about personalization back then. But obviously, a lot has changed between the data that's available and the technology that's available to process and deploy this data. So, what major trends are you seeing right now that are affecting banks in the financial services landscape, and how are the banking customers' expectations changing, and what has changed the most in the last couple of years?
I'll talk about a few things, and I think we're really we've seen, or we've pivoted. Oh, and I guess, COVID was an accelerator here, but we were really on this trajectory where the digital bank was becoming the center of financial services. And if it wasn't that before COVID, it is now. So when I think about the primary banking channel, it's the digital bank, and it's the digital bank probably for some massive percent of people. In fact, even the older generation that might have engaged with branches, because that's how we grew up, engaging with branches, I think even they've become very comfortable in doing the bulk of their transactions via the digital channel. And so that trend means a lot of things. It means we've accelerated or grown the number of people using it, which means that channel has to be much better. And regardless of the generation that you might be in, we're all using a bunch of the tools on our phones. The phone technology has gotten fabulous. It's become a platform in and of itself to deliver these experiences. Well, now we're getting compared to, maybe 10 years ago we weren't, but now we're getting compared to the experiences you're having on Amazon, you're having on Apple, you're having in whichever kind of apps that you use. That's the comparator, and those experiences are quite good. I'm a heavy user of Amazon. We use Whole Foods, and so we order through Amazon. All of it comes, if I have to delay this call today a little bit, it's probably because I'm getting a package and my dogs will go crazy. And so that's the biggest thing. I think the people, we used to compare in the industry. You'd compare yourself. If I was working for Canada Trust and that was the first bank I kind of worked with in Canada. If we were comparing ourselves doing competitive analysis, we'd go out to TD Bank, we'd go out to Bank of Montreal, CIBC, Royal Bank, et cetera, and we'd see how we'd compare. Well, that's not good enough anymore. In fact, you've really got to think about who to compare yourselves to. So really those customer experiences, the market's changing, who we're comparing ourselves to. And what that means is that, we know that, Amazon, and they're pretty good at it. Although the one example I will use on personalization that's not perfect. If I buy 6 pairs of golf socks, you don't need to show me ads for golf socks for the next month, right? Just because I had that behavior, I probably don't need 6 more pairs of golf socks. But the point is that they're really digging into kind of the purchases that I'm making, trying to understand what I'm interested in. We need to be doing the same in banking. And so that's a real trend that we're seeing. Banks are getting there. I think that what we did during COVID was quite interesting, which was really, we started to really focus in on, well, how do I'm missing that greeting that I get in the branch. And so little things like, good morning, Darryl, and being excited by it, putting an exclamation mark on it. That's the easiest form of personalization. That's not hyper personalization that we talk about, but we've really embedded this concept of who my competitors are and kind of how to think about how I personalize those experiences. So those are kind of the two big things that I would talk about.
And that's huge. And as you mentioned, it's really something that's even amplified more because of COVID, because we got sheltered in and we started realizing that, geez, when I watch a show on Netflix then says, since you watch this, you may want that. I tell the story in podcasts quite often that, last year when I was down in Florida, I got into watching shows about lagoons and pools, people building pools and lagoons. And all of a sudden, all I'm getting are different types of shows about building a pool. And I had no interest in building a pool. It's just interesting to me. But what's interesting because people noticed that my activities were spurring on other recommendations that made my journey easier. So we know already that the financial institutions have done a really pretty decent job in the risk and fraud areas at personalizing the ability to look at personalized risk scores and personalized fraud scores and be able to really look and say they can understand each individual from a negative perspective. Why are we falling so short of customer expectations in the positive way, and as you mentioned, the hyper-personalization way with regard to services and products and recommendations?
I think it's likely because we had branches and we had people with smiles on their faces that could greet people and do these positive things. And so I think, with a deep background in risk management as probably the only actuary running a marketing department that I'm aware of, we historically, the risk management pieces of this were things that we did behind the scenes, the things we did in the back rooms, either underwriting teams or in an automated ways, using tools like I mentioned already around Falcon. We're talking about, billions of transactions a day that flow through that you have to react to and you're trying to protect. I think that the real investment being made now and today, we're still doing those investments. Fraud hasn't gone away, new credit and risk hasn't gone away, but we're really taking the way in which we've done those things, the learnings that we've got from those things, and bringing to bear on kind of this next best experience, this next best product, next best offer, engaging with the customer in a positive way. And there's a lot of reasons for that. I think some of it is that, if we take all the data that's available in the world right now, something like 90% of it was made in the last 2 years. And there's all kinds of metrics around that. But the data is piling up. And we're getting much better at bringing that data to bear, meaning I can get access to it now. When I started in banking, it was all about account level risk. And now when we're really talking about customers, we're talking about customer level. We're talking about understanding the customer at that level. And we talked about lifetime value, right? We've talked about lifetime value forever, but we've never done a good job of really understanding it. Well, now that we have this data, now that we've been storing this data for a long time on customers, we can actually get to that and understand it. And so for Darryl's case, if I was applying for a mortgage and giving me mortgage offers, or hey, better yet, since you've already got a mortgage application with you, leading is, well, what might I need next? Right? Because really, when we talk about personalization and we talk about it from a banker perspective, I don't do things unless I'm going to deepen a relationship, I'm going to create more loyalty, or I'm going to make more money. And those things have to all come together for the business model to work. It's not greed. It's more about making sure the business model works. Well, when we think about financial wellness, well, that's a big thing, right? We think about financial education. We think about deepening the relationship. We think about making more money. All of these things have to have data. You got to derive insights from them. And I think the big trigger from an industry perspective and how we got here is we have all that data. We're now getting modern platforms where I can do these things at scale. And the other thing that the techies want to hear as well is you got to do it at low latency, because you got to be able to react very, very quickly to do some of these real-time things that need to get done.
So on that point of the platforms, one of the biggest challenges right now are financial institutions of all sizes are challenged by how do I get my arms around this? But many financial institutions now are realizing the power of the collaboration with third-party providers such as FICO. Now, how does FICO help financial institutions close this expectations gap? How does your platform remove friction and increase speed of decisioning?
That's we could spend days on that one, but I'll try to hit a couple of high points. I mean, really, FICO platform is and platforms in general. A platform for decisioning in general has to do a number of things. It has to be able to bring data into it that are across various services, and so some of those are going to be external bureaus, other third-party data providers. You might need to bring in a tool that does ID verification, all kinds of things. You have to be able to bring in the data and services, and you have to be able to manipulate them in ways that allow you to save time, build things up. If I want to know the average balance in Darryl's account over the last 7 days, I don't have to wait for the real-time I'm going to use that data in a rule set. I should have that calculating behind the scenes so that whenever I need it, I need it. And so really having kind of pulling in your data and all of the processes. Platform, then you need to be able to generate insights, although you can arguably do that offline, but there's some real-time, build them offline and then they get deployed for real-time or right time. And then you need to have that ability to, and again, I think, you build it and then you're operationalizing it. So whether they're decision services or whether they're models that run in real time, you need to be able to do that. And then when you get into it, it's like, well, what kind of actions am I going to take from it? And then how do I track? How do I manage? How do I simulate those so that I can actually understand the impact? And then how do I test, A/B test, champion challenger is a term that we use at FICO. And then how do I validate and govern all of these processes? And so you really, from a platform perspective, the beauty of a platform well constructed, and then I do think FICO's platform is very well constructed, is that you have to have all these capabilities in one place. And I think if I was to give one sales pitch on our platform is that the best thing that we do is operationalize. We have all these great tools and capabilities and data and grabbing data, generating insights from it. That's our legacy. And we've got a great set of tools for that. But fundamentally, I think our key differentiator is really operationalization, and then this great learning loop that you get. Sometimes you can do that learning loop offline, and on some platforms you do. But really, to me, a platform is really, it's all about getting all those people in the same place. That's where you're generating collaboration. So I've got my data science people working in the same architecture, that I've got my risk management people working, that I've got my product people because they're caring about what's coming through the door. And then I've got the risk people and the product people tracking it at the back end. Are they getting the results that they'd expect? And I've got that across all different products. Because now I have to think at the customer level, because that's really, when you think of the digital channel, that's the other thing that the digital channel is really forced. It's that it's very difficult in the digital channel to think only about a product. And so collaboration across product, kind of at that consumer bank level, at the customer level, is a big thing.
It's interesting. One of the biggest hurdles, I think, with a lot of these third-party collaborations is getting a new partner brought into a financial institution. We're all overwhelmed with what goes on the next day. But a benefit I think that FICO has, I'm just talking from a layman's perspective, is that you already have relationships with a great percentage of financial institutions. So bringing in a new platform to do something different than just the fraud and risk area really has got to be simplified a little bit. It makes it so the implementation can be a little bit easier. The relationships are already there. The trust is already there, which is really a big deal when you're working with third-party providers to provide a solution for your customer base. I would imagine that really helps you work with your existing clients to bring in new ideas and new solutions, correct?
Yep, maybe. I think we're victims of our own success. I think the bulk of people know FICO for FICO Score, and it is a great set of products. For those that watch the FHFA or listen to the FHA announcements, there's FICO Score 10T. It's a great opportunity. It's a fantastic score. We've got other scores in there, and I can talk. I'm wearing an Ultra FICO hoodie right now, and so. People, I think you're quite right. People have a trust, they have an understanding, and certainly folks that are using Falcon or Triad, which are kind of our two big legacy software products that are industry leading, that are market leading products internationally, not just in FICO and not just here in the US. I think it does bring a level of trust. And so I do think it's there. I think the challenge that I have, and I spend most of my day focused on software, if not all of the day focused on software. The challenge we have to is educate people on kind of what we're doing and why it's important. And these platform moves are challenging. They're big because you're taking on something like account management, or if we wanted to talk Falcon, for example, you're taking on something that's heavily embedded, often at a processor. So you're really kind of having to look at kind of all these challenges. And because it is a much broader tool than something that single built for purpose, like account management software, like fraud software, they impact a lot of other things. So I think where we see wins, to jump kind of ahead a little, where we see wins from a FICO platform standpoint, assuming we have the trust, they understand our brand, so we get in there. Where we have wins, it's really when people start to understand that I'm not just going to solve my originations challenge. I'm going to have the opportunity to solve my originations challenge. And then next year, when my customer management tool comes up for renewal, I'm going to put my customer management activities on there, my collections on there, right. That's where you start to get, you start to really get it. And I think the shops that we talk to, we call, the enterprises where we have multiple implementations or multiple use cases on our platform. IT loves us because we've just made their job easier. Instead of managing 25 different applications, they're lowering the number down. All the third-party data that you have to go out and get, well, you can control that through FICO platform. And so you're really using fewer tools, and we've almost created this role that's between business and technology, like this business technologist. Now when I go to make changes to strategy, implement new scorecards and other things, I don't have to IT doesn't need to be involved. IT is managing the overall infrastructure and ensuring that we're working together. But that to me is kind of the what I would say is a massive opportunity, for a massive way in which we leverage that brand and get into kind of having success with the FICO platform.
It's interesting because all these things you're discussing provide amazing insights for people internal to the financial institution. What we see a lot of times is the challenge from moving from great insights to great deployment, the actually doing things with what you have. One of the key areas is looking at personalization, looking at how you can personalize my experience. You mentioned a little bit about saying the "Hey Darryl" or "Morning Darryl" as opposed to more hyper personalization. What's the difference between what you'll say is personalization, hyper personalization, and why does it matter?
So, the one I mentioned too, and I'll throw a plug out to them because I think they've got one of the best onboarding experiences. Lemonade, and Lemonade is a
Yep.
is a app or is a company that actually does online insurance, home insurance,
Yep.
and pet insurance and other things. And it's a very simple process, but it really is. It's this, and that's not so much. I mean, it's personalization. I wouldn't call it hyper personalization. I think that why, hyper personalization is actually, like I kind of previously mentioned a little bit, is really kind of figuring out where Darryl is. It's marketing to the one, and what's the next thing that Darryl needs based upon what I know about Darryl. And in my case, I bank with Chase as my primary bank. It's not a plug for Chase, although I do think they have one of the best apps out there. But it's given that I have all of this rich data, it's deploying that to understand and offer me different things, understand experiences. If I'm running up my credit card, my 2 credit cards at Chase up, do they offer me a loan, or do they reach out to me that my score is going down or going up and rewarding me for such things? And so the importance of hyper personalization really for banks is really to enhance the trust, make the experiences easier. If I'm applying for a second product, don't ask me for my name and address. Maybe ask me to confirm them, but asking me for something you already know kind of lowers my like, makes me feel like you don't know me.
Lowers
right?
the trust.
Lowers the trust,
because you go, geez, if you don't know who I am right now, yeah, exactly.
And I mean, that's the risk management person in me too. It's like, well, why are you asking me that? Like, you already know that. And little things like that will drive the average person crazy. You don't see that in other places. I think on that one point, hey, if you want to say, hey, we're going to send a card to you, just, hey, confirm again that this is your mailing address. I think things like that are fine. I think more importantly, and one of the things, I'm leaned up against this is this idea of having this customer experience. Really enhancing. Banks are heavily focused on trust is a big theme. It has been for a long time, but I think banks are now getting into measuring trust and understanding trust a bit more, doing much more than just an NPS or like a how you feel about me score. They're actually doing much more, leaning in on it. And so looking at ways in which I can give trust. And one of the ways is that the process doesn't have to be the shortest process for a particular opportunity or sale. It needs to be the most intuitive, and it needs to be the most comfortable. And so sometimes, and this is, again, I'll use the Lemonade pet insurance example that I've used in the past when I've talked about this. It's that they did chat to ask me questions, and they asked my dog's name, and I gave the dog's name. They asked my dog's breed, and it's just like, Harper's a good boy. And like this little process that, yeah, it probably took longer than it would have took if they just presented me with a form and I'd have banged away, because they really only need the dog's age, any medical issues, the type of breed, and then they can estimate kind of, the costs associated with it. Because as an actuary, I can appreciate that. The reality is they had this process that took a little bit longer, but was more tongue in cheek and more interesting and more engaging. Yep. And that's not hyper personalization. That's just building a process that people kind of enjoy going through. And then what hyper personalization would be doing that for millions of people, asking the right questions of them on the products that they want at the right time. And again, I said products, but it's really making sure that Darryl's having the right experience. And because it might be, hey, Darryl, you made 2 transactions at the same place within an hour for the same price. Did you do both of these? That's a transaction fraud, or potentially just a double charging. Somebody's made an error. Well, highlighting that That builds trust. And by the way, that saves money if it's actually an error or a potential issue from a merchant perspective. So all kinds of fun things that can be done in the space. It's so important. And the things that are called hyper personalization or personalization or hyper personalization at scale, however we want to kind of say this as an industry, we already do some of these really well. If you use the fraud example, the credit card fraud example, that's one done really well. It's a narrow application, but it's incredibly personalized and has to be done at speed to literally billions of transactions a day. And so I think that that's a fascinating one.
Well, it's interesting, too, because in the ebook that FICO did, we talk about not only personalization and hyper-personalization, but moving from experience to engagement, which you've already discussed it with Lemonade, where you have some interaction back and forth, and it makes it so that it's more comfortable. It builds loyalty, and more importantly, I think it makes it so there's more reasons to have discussions. As you said, we're all comparing it to that one-to-one personal experience we had in the branch where we went in maybe every week on the same day, same time, everything like this. Well, we need to keep that because in the digital world, it can be let go of too quickly. And there's a whole lot of firms out there willing to take our place. So you also talk in your ebook about think big, start small, act quickly. Can you explain a little bit about the benefit of those elements with regard to implementing, let's say, an intelligence platform?
So let's start with think big. What I mean by really think big is have a plan, right? Have a customer level, bank level strategy for personalization. That's the think big. Like put your plan together. What would you do if you weren't restricted? Now set us, where do you want to get to? Yeah, there's going to be costs and systems and all kinds of things that you might have to do to get there, but put that plan together and think big. Think where you need to get to. What are your competitors doing? What are the people outside of your competitors, but generating the expectations around experiences? That's the think big. Build that strategy. Act small is okay. Well, given all the restrictions I have, I don't have this great platform today, but maybe I've got some legacy software that I can modify experiences. And I can do the little things that aren't quite hyper personalization, but make sure you got all the personalization stuff right. Like if Darryl's going into the app and it's morning, say, good morning, Darryl. Put a little excitement around it. Put an exclamation mark on it. Like engage with me a little bit. You're replacing, in some cases, a branch process where somebody was greeting me, somebody knew me, somebody knows my dog's names, or if you have kids, it knows your kids' names. You're really replacing some of that. So you gotta find a way to engage with that. You also have to figure out if people want that. Some people might not want that. So it's like, okay, well, they want to get right to something. Try to find out who those folks are that want to work quickly versus have an engagement. I think you probably start with the longer process or the more engaging process. Act quickly then is to have an ability to make these changes. And so as you start to figure out what your big picture is and you start to make some of these minor changes to actually have things get a bit more personalized given your current constraints, then start to figure out how do I get a platform and how do I get the tool set in here so that I can actually achieve all of these things on this scale in there. And then that's where platforms really shine because, platforms to me should provide you three things, right? They should be able to go fast. So they can scale. If I've got a billion transactions coming through or all kinds of data I got to process, models I got to run, they need to be able to do those things quickly. Then they need to be agile, which means I can make changes and apply those changes very quickly. And then they need to be resilient. To me, resiliency is created through learning, right? So I can make these changes, I can simulate, have expectations. Did I get them? Nope. And then learn. And then, kind of that to me is kind of where I would kind of say personalization and platform, where the real challenges are and where the real opportunities are.
So when we look at the platform and the data and the insights and the processing, the speed, all the things you're talking about, how important is it today for financial institutions to democratize the data insights that are created across the entire organization? In the past, in both of our banking legacies, it used to be that the data area held the data. The fraud area held all the data with fraud, and marketing held their marketing data. How important is it now for the insights that are generated from a platform such as FICO's to actually be democratized so that every person in the organization that can have any possibility of being in contact with a customer has access to these tools?
Yeah, I mean, it's a great question. I think I love the term democratization, by the way. We probably don't use it enough, but it actually is a good way to think about the data, certainly for an enterprise. And so, I mentioned previously, kind of, the legacy way of the banks are organized are kind of by product. And so I was head of product risk for a credit card. I really just focused on credit card. And often those systems didn't talk. I didn't know what was in their savings account. I didn't know that they had a mortgage. I didn't know they had a car loan with us. I had to focus in on kind of this one tool, this one set of data. And if I wanted even to get access to that other data, it was either difficult or they wouldn't give me access to it. Really where we've moved, and you'll hear terms like 360-degree view of the customer. That's one that I like, although it's probably overdone a little bit right now. But really, with modern data warehouses, data lakes, choose your term for it, bringing all that information to bear actually makes us much smarter. We're not flogging customers for 4 different products at the same time because we've got 4 different areas that have, different metrics that they have to do. You have to fundamentally figure out kind of what this client needs and take them on that needs journey. You can't do that if you can't get access to the data, or you can get access to it, but it's not in a timely way. And so, a modern platform, and certainly our platform, really allows you to kind of get at the data in the place that it's at, bring it in, get it into a format or get into a style for it, build profiles, build rules that can be deployed. And then, one of the other benefits of kind of being able to do that across the various parts of the institution, if you just focused on the consumer bank, for example, is I now can when I create an analytic, such as a simple analytic, a capacity to pay, well, then everyone involved, whether it be credit card, loans, mortgages, uses the same calculation. There's this reusability, right? And then you've got this low code, no code environment where you can compose, the business technology can compose, drag and drop quite often, what that decision flow should be, what the rules should be, and where that model should be applied. And so now you're getting these great ease of which you're implementing things. And all of the people are working in that same place. So collaboration gets a lot easier. If I got data scientists in there, I got the technologist in there. I've got the governance people in there, the people that look at, how the models are performing, who has the ability to see things. You still have to have kind of, some amount of ability does that group need access to that data? The fraud groups are very, very sensitive around kind of what those models would look like, who gets to see those. Credit risk are the same, especially if some of the data is that you're using for scoring is from outside, because if there is an ability to manipulate data, for example. In the old days, we would have this challenge of we would have something like, how long have you worked at your current business, your current job? Well, we didn't necessarily verify that, but we would ask the question, well, if people know that question's there, they can figure out that maybe I should say 10 years and not 1 year. Most modern models don't have data that can be manipulated that way, but you have to kind of think about some of these things and kind of who can see what, is it appropriate? But as long as people have access to the right information, really building this 360-degree view of the customer and then figuring out kind of what journey does this person want to go on, needs to go on, where are they at in their financial life? Do they, a lot of major life events you have to think through from a banking perspective, home purchase, savings for university for kids, things like that. Where are they? Have they got retirement savings? And really kind of understanding it so that you truly have a good picture of your customer. Where I think the industry would love to get to is that we had AI, a personal financial manager that was AI. The industry would love to kind of get to that stage where I know everything about this customer. These are the things this is the journey that they likely want to go on. And I can provide them with advice in an automated way, in an intelligent way, as well as still giving them access to experts, individuals, whether that be through video, through branch, or through other channels. So I think we're getting closer. We're not there yet. We're getting closer.
So when we're looking at this whole personalization and trying to make it so that more employees have more access to the customer data, but more importantly, that customers know you have access and are using this data, how important is transaction data today to build near real-time engagement?
Great question. I think, look at it from a couple of sides. So transaction data, we've used transaction data for quite a while in credit card fraud. And so right. I won't spend a lot of time on that one. That one makes sense. If I build Darryl's behavior is Amazon and the golf course and restaurants. I live in Napa, so it's all restaurants, wine, golf courses, and stuff. And then all of a sudden, I'm going to make a purchase that's outside of that behavior. Then that's a higher risk transaction you can action on. I think where we've really seen transaction data come to bear is then as to supplement kind of credit risk understanding. And there's really the big difference between where we were, let's say 3 decades ago, 2 decades ago, was when we started to really move towards just using credit bureaus to do credit analysis, because we got away from all of these difficult things. It was difficult to kind of get access to transaction data, transactions in my daily checking account, for example, if I was in the credit card group, challenging from an IT perspective, challenging from a modeling perspective, all kinds of issues there. And then if Darryl's transaction account was actually not at Chase, it was actually at Bank of America, well, I couldn't get access to that data. I could get statements, maybe I could look at it. So we really, as an industry, certainly from a risk perspective, got away from cash flow analysis. But if you think of the 5 C's or the 4 C's, depending on which kind of credit school that you were behind, you would look at things like that when you were doing a manual review, and you would make sure that you understand where the ins and outs of cash flow was. Well, transaction data now being able to either link it, and in the U.S., Plaid, Finicity, Yodelay, for example, bringing in that transaction and really understanding it, or in the case of that account is with you, you can bring that data in from the other side, because now you've got your data structured in such a way and your analytics done that I can bring in that data and information. Operationally, incredibly valuable. So I mentioned earlier, I can verify income because I can observe it. It's literally going in there. Now that's net income. Well, I can gross that up. It's pretty easy to figure that stuff out. I can verify rent. I can do a better job of understanding kind of where you're spending your money. And then from a fraud perspective, I can also look at the behavior. Does it look like a real person? And if they're new to bank, that's a big challenge, a big opportunity to improve it. Just asking for the bank account to be linked is a great fraud preventer tool, by the way. And that one's changed dramatically. 10 years ago, there was a lot of friction associated with that. I think with the growth in the fintech industry, people growing up, kind of doing some of this, and just banks having a bit more trust in regards to how they're using that data. And then the third one on that spectrum is improved credit risk, and it's significant. Ultra FICO, which is the quarter zip I'm wearing today, it's data. It's the traditional FICO score supplemented with transaction data and profile data that the customer has. And really, what it does is and I'll put my actuarial hat back on. Really, what it helps us understand is it can help us lower the volatility of the current estimate. I've now got more data points. I'm bringing more data into it. It also allows us to score more people. So if you're a traditional bank in the U.S., you're using a FICO score somewhere, you can actually get more people scored. So it's more inclusive. For thin clients, and then again, I'm talking about transaction for thin clients on a bureau, 3 trades or less. Well, if I can supplement with more data, I'm going to get a better estimate. Now that's the Ultra FICO pitch. But the reality is it works the same way. If I can bring in this other transaction data, even if I'm not using Ultra FICO score, I can improve credit risk. I can enhance credit risk assessment. I can understand affordability better. I can impact fraud, and I can do a better job of operationalizing and verification of income and capacity to pay, and rent. And rent is a real challenge in the U.S. if you're trying to do online lending, because it's very difficult to verify. And if you are on some of those databases, it's actually quite expensive to bring in. When I can just I can go ahead and immediately just, oh, there it is. It's on the first day, it's on the last day of every month or on the first day of every month.
Right.
It's actually really easy to spot in the transaction data. So there's all this great power that comes from it. It's worthwhile to put a plug in for open banking. Now, open banking isn't a thing in the US. It's becoming a thing in Canada. And it's a thing in Europe and the UK and Australia. And so now that's a regulation, but it's really then, because it's being regulated, they might as well be taking use of it. I don't think most countries right now, I think the institutions are meeting the requirements, but aren't taking the opportunities that this data really presents. The US in this regard is actually well advanced, because we've really had bank aggregation for got to be 15 years. I know I've been using it for the last decade. And so, because it wasn't regulated, not everyone was super comfortable with it. We've really gotten as an industry, pretty comfortable with it. I think that, whether or not we see regulation or not, I have all kinds of thoughts of whether it'd be a good or bad thing, whether it would stifle innovation or not. But I do think that the uses of that data, using it for good, using it for fraud prevention, better assessment, better analysis, and it does a great job of helping us truly understand and now get deeper into personalization. I think it'd be a shame not to use that data in better understanding the customer for opportunities, not just lowering credit risk, not just lowering opportunities for fraud, but actually helping them understand potentially, savings rates. Like, tiny little example, and then I'll pause there. But I mentioned I bank with Chase. They will show me things like average spend on groceries. And they're asking me that question. Why are they asking me that question? Because in my account, they're observing that I'm spending more than the average person. And so they're highlighting a little lesson for Darryl that maybe you should look at your spend in groceries because the average household's only spending this. Those are little learnings. They're not selling me anything. They're giving me a little advice from a financial wellness perspective that I should think about.
So with power comes challenges sometimes. What's the biggest challenge you're seeing in the financial services industry right now, moving beyond the way they've used FICO in the past, the way they can use FICO going forward?
So with great power comes great responsibility. I love the Spider-Man line. The challenge is the industry. We're not there as an industry on platform deployment. We're still not really there on cloud deployment. There's still a lot of challenges. Privacy and data security is paramount. The industry is doing an okay job there, I think. I think there's lots of room for improvement, certainly here in the U.S. And other places, but here in the U.S. is where, often where I end up being quite focused. I think, the opportunity for institutions is to continue to leverage the power of their brand, continue to focus in on trust. When we think about hyper personalization, we think about platforms. We've made a lot of significant investments as an industry. I think that from a platform perspective, some of the challenges are, and this is kind of a growth of where platforms are. Some of the challenges are, these are very large initiatives and they're very expensive initiatives. It's not just us, and we certainly work with all the groups that we can to make sure that the pricing is right, that we got the right people in deployments and other things like that. But these are big initiatives, and I think that in some cases it makes it difficult for the medium or the smaller size institutions to dig in. And so I think that as an industry, that's one of the areas I'd like to see is focus. We're hyper focused on getting our COGS down, of course, and that means that we can get our prices in and open up more so who we get to. We at FICO, and I think many in the industry like to see is we want to get to a point where we've actually got a marketplace where you could literally go out, kind of sign up, so to speak.
Yep.
Start to map your data into the process, map your tools, and there'd be some PS potentially necessary there. But actually that you could actually go out into the marketplace, choose the things that you wanted to do, and just begin to do them. And then if you want to do another use case, just tick the box for the capability that you don't already have deployed and start to deploy it. There's a lot of institutions trying to get there. Now, what FICO does on FICO platform and our competitors, very complex. And so it's not like it's not like the marketplace that your iPhone has in their apps, but we'd like to see it get to a point where third parties could literally build solutions on FICO platform that could be, they could potentially, sell on there. So just like selling an app on iPhone, but we're a ways from that. That is on our trajectory. Yep. It makes sense for us because if we can get it to that place, it really opens up some of those smaller institutions to opportunities to actually deploy platform. Great benefits for them in the sense that we get that to the right place. Costs for them can come down because it's the same challenges that they have. They have the same use cases. Their numbers, meaning the number of customers that they have, are just smaller. And so there's a little, there's a little democratization to that. Like if we can literally get it to that place, then a lot of folks, we at FICO and others can be a lot more successful in getting our products used and in the right places. And so the customers across, whether you deal with a small credit union or whether you deal with the likes of Chase, Bank of America, Wells Fargo, et cetera, that all institutions can get access to some of these great tools and capabilities.
Darryl, thank you so much for being on the show today. It's interesting because as I wrap up, I think about, what institutions should do next. And it gets back to the three terms that the FICO ebooks had, which is think big, start small, and act quickly. I don't think better words have ever been spoken on a lot of different fronts, but certainly when it comes to platforming your data, your insights, and your ability to personalize solutions. So thank you so much for being on the show.
Thanks, Jim. Thank you very much.
Thanks for listening to Banking Transform, the winner of 3 international awards for podcast excellence. If you enjoyed today's interview, please give our show a 5-star rating on your favorite podcast app. Also, be sure to catch my recent articles on the financial brand and the research we're doing for the Digital Banking Report. This has been a production of Evergreen Podcast. A special thank you to our senior producer, Leah Haslage, audio engineer, Sean Roll-Hoffman, and video producer, Will Pritz. I'm your host, Jim Marous. Until next time, remember, customers expect you to know what they need before they know it themselves.